Have you ever wondered where Chiliz could be heading in the upcoming 2025 bullish market? If so, you're in luck because today I'm going to be jumping into my Chiliz price prediction for 2025. If you find this useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, and let's jump right down into the charts and take a look at what's going on with Chiliz. So this is Chiliz paired up with USDT. We're on the one-day Binance chart here, and it's been a very interesting kind of chart, a bit of a roller coaster, and some great prices have been seen so far. Now, for those who don't know, we're going to basically use a couple of tools to help us predict out where the market is going. So the first thing we're going to use is going to be a Fibonacci retracement tool. This is pretty standard within the kind of world of trading and cryptocurrency, but I have amended this one and changed it ever so slightly. If we come into here and I go into settings, you can see that I've removed all the horrible colors that comes as standard, and I've used some custom numbers on here as well. Okay, so feel free to pause this and take a look at these if you want, but I'm just going to quickly run through them for the purpose of the video. So we have 0, 0.236, 0.382, 0.5, 0.618, 0.786, 1, 1.618, 1.382, 1.236, 0.702, and 0.882. And occasionally I also turn on this one down here at 1.272, but I turn it off because it does get in the way sometimes. Let me show you what that looks like. As I have my 1.236 at the top there, if I go ahead and turn that on, you can see that it gets very, very close. And this basically is the difference between kind of tracking WX, Y, X, and Z patterns, and WX pattern, WXY patterns, ABC patterns, and so forth. So I turn that off and I only put it on when I need it. Okay, so those are the Fibonacci levels, but the most important setting is this one down here. Okay, this particular setting is off by default. I have it ticked because I use my charts in logarithmic style. Okay, if I turn that off, you get all the wrong numbers on your Fibonacci retracement and extension tool. Okay, and that's obviously going to lead to the wrong conclusions, wrong price expectations, and ultimately lead you down the wrong path. So if you're using a logarithmic chart, you must go into your settings here and tick that on, and it will set everything up in logarithmic style. Okay, we'll go ahead and take a look at that. This is what a chart looks like when it is in non-logarithmic, right? Standard chart. This is what it will look like. And this is what it looks like when you put it in logarithmic, right? It's easier to see what's going on and you can analyze the data more efficiently. So understanding that that is off, that is on, and being able to put your Fibonacci retracement tool into the correct setting sets you up for success. That's the first tool. The second tool is Elliott Wave. Now, Elliott Wave kind of splits opinions. A lot of people don't believe in it. Some people do believe in it. It can be overly complicated. Essentially, what it does is it tracks people's behavior. Now, it's very predictive. It has 100% accuracy if you back test it and you apply it correctly. The problem that you have is a lot of analysts don't apply it correctly. This is not the fault of Elliott Wave, but is the fault of the analyst. No analyst, in my opinion, is ever going to get it 100% of the right 100% of the time. It's very, very complicated subject, and it's very difficult to actually apply it in practice, right? It's great to understand the theory, but it's very difficult to actually apply it. Now, obviously, when you're an analyst, you have your own thoughts, your own opinions, your own biases, and sometimes they creep into your analysis on the chart. And if so, you kind of maybe overlook a few things. Maybe you're not seeing exactly what Elliott Wave wants you to kind of understand. And well, as such, you might get it wrong. So I did put together a whole entire course on Elliott Wave. You can find it over at 𝗕𝗘𝗪𝗀𝗀school.com. It's well worth doing just to understand what it's telling you and understand these videos in a lot more granular level of detail. But also, I do sections within the course showing you how to actually apply it. It's harder in practice than it is to understand, but nonetheless, it's well worth checking out. Usually there's a link in the description below, and I normally run some kind of discount code on it as well, so you can check it out and basically start understanding a little bit more about the psychology of the markets rather than just relying on indicators. Because in this video, we're going to predict out the next bullish market without using TradingView indicators, right? Because they only ever show you what's happening or happened in the kind of brief past. They don't really show you the sentiment, the market participants, and what their behaviors are telling you. Okay, indicators can't do that, so you have to use price analysis to help you instead. Okay, so let's go ahead and do just that on the Chiliz chart. So we can see a very explosive run to the upside. And this is kind of a pain point for Chris on the channel because he really wanted to buy into Chiliz and he never did. And we saw significant growth, right? It was 24,600%. And it was great growth to the upside, right, in that previous bullish market, going from March 2020 to kind of March 2021. 1 year saw 24,500% in gains. It was a very, very good time. The question becomes, is Chiliz gearing itself up to kind of repeat itself? Now, if anything, it's a much stronger foundation now from a fundamental aspect than it was previously. And we want to see whether or not the behaviors in the market are kind of actually aligning to that. As you can kind of see here, I've left these 2 yellow boxes on the chart. Simply because these actually indicate where Elliott Wave was telling us that we wanted to be dollar cost averaging into Chiliz, which of course, if you remember down in our Discord server, you'll know that I have been buying Chiliz, right? Now, the first area, which kind of happened back in 2023, was this one right here, between 3.66 cents and 5.98 cents. A lot of people told me I was absolutely crazy, but there you are. A lot of people also kind of incorrectly believed that the bottom was in over here in 2020, but again, Elliott Wave tells us otherwise, led us down here. Now, this particular move told us that we actually had one additional opportunity for accumulation, and that was what we see with that second yellow box, okay? This one here is the most recent accumulative range for Chiliz, which was 2.39 to 5.44. And as you can see with Chiliz here, the behavior is tap into this and launch and leave it. Basically didn't go back for a while. Now, for the most part, taking a look at our structures here most recently, based on this behavior, this is known as this is known as an expanding diagonal pattern. And as such, this tells me that we're not likely to drop back down lower than the existing low for a couple of reasons here, right? That existing low being 4.31 cents. That's our bear market low point. The first reason for that is that we're tracking something called a W, X, Y, X, and Z pattern. And this is really important based on Fibonacci and, of course, Elliott Wave as to why the market told us these things. For starters, as we kind of had this correction to the downside over here, you can see that there was a chance that this was the bottom, but again, we also saw that Bitcoin was going to drop down even further. So June 2022 was not the low. This had a chance of being the low, but the data suggested otherwise, and that led us down into this one. Now, because of that, and this was an entire structure that is an ABC pattern, this actually led us down deeper to the kind of 1.382. That meant that we had an additional move to the downside over here coming into this additional low. Okay, that actually should have potentially been a little bit deeper, but nonetheless, we kind of hit the low, hit the areas on the nose anyway. Okay, so the kind of importance of understanding that a W, X, Y, X, and Z pattern is the maximum number of zigzags that you can have. You can't have any more. So once you've kind of completed this, you kind of bottom out and then you have no choice but to kind of rally. Now, obviously, confirmation of reversal only really happens once we get a break above the X wave in this particular case. So we are going to be looking and paying close attention to Chiliz as it looks to break 16.79 cents. Okay, we aren't there yet. So for the most part, that behavior on the way to the downside was highly predictable with Elliott Wave. Then, of course, we have this fantastic bullish run to the upside. Now, because we haven't got a huge amount of data here, what we can tell is that this was a very impulsive run to the upside that actually still technically fits within its impulsive structure, but I don't think that's really what's going on. I would say that there's a high probability that we do break into new all-time highs for Chiliz. And the reason for this, I believe, is due to how Elliott Wave is telling us, that's not the low, that's the low over here. Elliott Wave is telling us that this particular pattern has kind of the ability to kind of be represented as a repetitive pattern. Okay, no guarantees, of course, and I'll go through where the minimum expectations are going to be. Let me see if I can get that. There we go. Okay, so the minimum expectation is going to be the previous all-time high, double top, right? That's going to be my minimum expectation for the bullish market. Let me zoom in and snap that in. So that's 94.49 cents. Okay, this happens to coincide just around that 50% Fibonacci level. Okay, you can see it between 50% and the 0.618 levels. So straight away, we note that there's a lot of resistance to be seen here. Okay, and we can take a look at these from the kind of analytical approach. Let's go ahead and snap these into this previous area of resistance. It happens to coincide right here, but kind of a little bit higher, a little bit lower than the 0.382, but you kind of see it right there. Okay, and of course you have that previous area of resistance that we're currently hitting marrying up very nicely with what we see over here. Let me go ahead and bring that into view right there, and I'll pull that across. A little bit of overlap there, but you can see see how this was an area that we've most recently faced a resistance on, also the 0.236 levels. Okay, so there's a little bit of resistance and stuff, but for the most part, the expectation would be, let me remove that one off the chart there, things have changed a little bit there. So we are going to be looking between 10.43 and 38.10, right? That's going to be your kind of area where you would expect kind of to repeat history. I don't think we're going to do all of those kind of gains, but let me show you what that would look like from that kind of idea. It would look something to this effect. I don't think that's realistic, but I do expect us to kind of find heavier resistance around the 786 and the 0.618. So I'm going to go ahead and draw another yellow box area in here, and I'm going to draw this essentially between the $1.28 and the $5.46. This particular area is where I think we are likely to find the bull market kind of peaking out. But like I say, minimum expectations would be 94 cents on this kind of break to the upside. So how do you get there? Well, we'll be looking for very similar growth to what we saw before. And we've kind of got this diagonal. This is a wave 2. We're going to be looking for a kind of bigger break to the upside. So let's go ahead and actually focus in on that for a second here, just to give you some ideas of those kind of target levels and what they could mean for Chiliz here. So if we're kind of bottoming out here, which I do think we find strong support on that 200-day exponential, then we are going to be looking for around 51.49 cents, which sits between the area here of the 0.382 and the 0.5. That area is going to be a trigger point. I'm going to just draw a little line in there. It's going to be at $1.50. $1.50, no, it's not $1, it's 51.49 cents, sorry, just there. Okay, and I'm going to go ahead and just label this up with the 1.618 label, click OK, and then I'm going to remove the fibs off the chart there. Okay, so that's going to be the first kind of area that we'd look for. Why is that important? Well, to get to our journey here, we're going to be looking for 5 waves. We've got 1, 2, we're going to be looking for the wave 3 to hit this point, a retracement, and then a push higher. And you can see here, depending on how high the wave 3 goes, will determine whether or not we can break into that $1.28 area. Now, do I think that's going to be where we find this kind of bullish market peak? I think it's quite possible. I'm not looking for anything really more than 128. It's possible that maybe we overextend and we head out towards $5.46 and things like that. But we've got to bear in mind that from our lows of the kind of 4.3 cents to get up to this kind of area of 128, it's about 2,800% gains. It's pretty lucrative, right? 28x. To go to $5, we're talking about 12,500%. It's possible for sure, but I do think it's going to be a bit of a challenge. We could potentially look at the 786 area, comes in around 7,500%, more ideal or more kind of realistic, but I am going to be on the lower side of this. I do think it's going to struggle a bit just because, I think that the bullish market, it's going to have, we've got a lot more project, right? The money is going to be spread out thinner. I do see Chiliz performing well, all by about its rise with a rising tide, as they would say. I'm invested in it. I just can't see it myself. So I'm going to be thinking more on the conservative side than I'm going to be thinking about those big kind of insane bullish targets at around $10 to $38. Nonetheless, the targets are there. We can see good progress being made. And I do think this is going to be a very interesting structure. Now, it's possible, of course, that we do something phenomenal and we just get some straight line runs. And, maybe we hit 128, in Q1 of 2025. If we do, then that could be very interesting. But I still see us kind of, looking for a retracement once this kind of hits these upper areas on these Fibonacci levels. But of course, guys, it's just my thoughts and opinions on the data in the charts. What do you think? Let me know in the comments down below. Are you invested in Chiliz? If so, what's your price prediction? If you found this useful and informative, smash that like button, guys. I really do appreciate that. If you're new to the channel, subscribe. And if you haven't done so already, guys, check that video out right there. It's one you don't want to miss.